Alrighty, what is going on, everybody? Welcome back to another CYPRX video fundamental breakdown, showing you guys the accuracy in which we operate with here at CYPRX, delivering you guys full fundamental breakdowns, market recaps, and forward outlooks, so that way you can get tapped in and pay attention to the things that actually move these markets. With that being said, in today's video breakdown, we're going to go over the total cryptocurrency market cap, take a zoomed out perspective, go over what happened last week, do a brief market recap, showing you guys that we had called for this in a previous market video breakdown. So hopefully you all have been paying attention. And then we're going to talk about and discuss what to be paying attention to this upcoming week, so that way you all can stay in the loop of the fundamentals that actually impact price. With that being said, if you enjoy these video breakdowns, do us a favor, smash that thumbs up button, subscribe. Thank you so much for returning. It'll be short, quick, straight into the point. So make sure you all are paying attention and taking notes. So first off, right off the bat, the market increase in value from roughly around last week's low of about $1.98 trillion up into the high at about $2.15 trillion, give or take. We called that in advance. Here is a video clip from one of the fundamental breakdowns that we called for last week, via the fact that we needed to see a further decline in the strength and the valuation of the United States dollar, with some supportive fundamental factors weighing on the total strength of the dollar as a whole and giving more demand to risk assets like crypto. Here is a quick 20-second video clip of that previous market fundamental analysis. And started its incline. So keep that in mind, that ideally, in order for us to see a recovery in risk asset strength, i.e. a bullish scenario in the total cryptocurrency market cap, we would ideally like the United States dollar strength to dip beneath the 105 key psychological level, further correcting more of this previous bullish move. That would most likely lead to a bullish recovery in the total cryptocurrency market cap valuation, in my personal opinion. And so just like in that fundamental release that we gave you all a couple days ago on the X space publicly and on YouTube, you all can see the weekly low of the total cryptocurrency market cap was roughly around 1.98 trillion. And we had a weekly high of roughly around 2.158 trillion. And just like I mentioned, in order to see a increase in the strength of risk assets, we have the DXY on the right-hand side, the total cryptocurrency market cap over here on the left. I said to you all specifically that we needed to see a decrease in the strength of the dollar below the key psychological level of the 105. And you can see, to the T of a degree, we did see sell pressure on the DXY, i.e. the US dollar index, all the way down into the low 104s, which did create more of a risk on market environment and allowed a slight recovery in the total cryptocurrency market cap. So hopefully you all took advantage of that fundamental breakdown, just showing you all the level of accuracy here in which we operate with at CYPRX. No magic Fibonacci's, no magic indicators. I'm not pumping out bullish moonboy hopium to you all. I'm actually giving you guys real pinpoint accuracy and fundamental breakdowns week by week, giving you all these updates to keep you all in the loop of what's actually going on. So let's just do a real quick market recap, and then let's do a walkthrough of the overall upcoming week and what to be paying attention to and where we could sit at towards the end of this week as we head into next weekend. So real quick market recap. Last week, the market had predominantly a risk-on tone, reflected in the rising prices of risk assets across the board. The total cryptocurrency market cap climbed from 1.98 trillion to 2.15 trillion. Additionally, the Great British Pound, the Euro, and gold all showed increased strength as investors hedged against a declining US dollar. Now, the US dollar strength cooled significantly, with a weekly high of roughly around the 105-200, dropping to the low 104s. This decline was driven by several different factors, so make sure that you're taking notes. Here are some of those factors. We had Fed commentary, where Jerome Powell's testimony to the House committee last week featured dovish to neutral remarks. He indicated that both inflation and the labor market are cooling, which could lead the Fed to cut rates if this trend continues. That is a big if. Again, we need to be paying attention to that and remain data dependent. Notably, he also mentioned that inflation needs to be near 2% for the Fed to cut rates, not necessarily at 2%. Then also last week, we had mixed inflation data, where the CPI report exceeded market expectations and declined more than economists had projected. But on the opposite side of the spectrum, the PPI remains slightly elevated, indicating persistent inflationary concerns. Now, the consumer sentiment on Friday to close off the week, we saw lower consumer sentiment and declining inflation expectations, contributing to the environment favoring risk assets. So, as a result, market greed and risk assets increased, driven by the optimism that the Fed might cut rates in September. This environment benefited cryptocurrencies, which had been under sell pressure from the previous 2 weeks due to the release of the Mt. Gox Bitcoin that we saw into the market. With that being said, again, we accurately called these fundamentals out to you guys in a pre-planned analysis from just a couple of days prior to all these fundamentals actually coming out. We mentioned that in order to see the total cryptocurrency market cap increase in value, we needed to see supporting fundamental factors driving more risk asset demand and weighing on that strength of the dollar, which we got. So this week moving forward, in order to see continued sell pressure on the dollar potentially dropping into these lower demand ranges, and the total value of the cryptocurrency market cap breaking above where it currently sits at $2.15 trillion, what would we ideally like to see? So here is our market update. Again, all this information gets pumped out to our private community before we release it to the mainstream. If you guys want access to these accurate fundamental updates, you guys can visit CYPRXtrading.com to tap into our private Discord, right? The amount of value and information that you get by being in our private Discord community is insane. So this upcoming week, what should we be paying attention to? For the upcoming week, the focus will be on several key US data releases and Fed speeches, which could influence the dollar's direction and, of course, risk assets. Key events include on Monday, Jerome Powell's speech and the Empire State Manufacturing Index. Throughout the week, we also have core retail sales month over month, retail sales month over month, building permits, industrial production month over month, unemployment claims, and the Philly Fed Manufacturing Index. So again, if all of this information that I'm speaking to you now currently sounds foreign, come tap into the private Discord, tap into the private Zoom calls, get educated so that way you actually understand fundamentals that drive these prices. For continued dollar weakness, the market would need to see signs of continued cooling in the US economy, such as weakness in the manufacturing sector, declines in retail sales and industrial production, increases in unemployment claims, and lower figures in the Philly Fed Manufacturing Index. Now, obviously, of course, this would create that one-sided volatility scenario where we see continued sell pressure on the dollar, but none of this is guaranteed. This is just ideal. So these indicators would suggest a slowing US economy, creating a less favorable environment for the dollar and most likely boosting appetite for assets traded against the dollar like crypto, GBP, which is the Great British Pound, the euro, and gold. However, if the upcoming data shows signs of strength in the US economy, it could bolster investor optimism and strengthen the dollar further, potentially leading to sell pressure on risk assets such as crypto and FX pairs traded against the dollar, and also putting sell pressure on commodities like gold. So, overall, we know that throughout the weekend, there was an assassination attempt on former President Trump. Now, I want to remind you all that in times of fear, uncertainty, and doubt, as always, it is crucial to remain resilient and focused on your goals. Ignore the sensationalism from mainstream media and stay committed to your strategies to navigate the markets and achieve your financial objectives. There is so much happening right now. It is absolutely imperative for you to tap into educational platforms that are keeping you all in the loop and keeping you all ahead of the curve like we do here at CYPRX. So with these fundamentals in mind, if we can see this one-sided volatility scenario where we get weakness in the dollar and continued cooling in the US economy, that's dovish to neutral comments surrounding all the multiple Fed speakers throughout the entirety of the week, which are scattered throughout the week. We need to see them reiterating to the market that if we see continued cooling in inflation and labor market figures, that could lead to a potential Fed rate cut. And then we also need to see continued cooling in all of these US data reports throughout the entirety of the week. If we can get that type of environment, then most likely the dollar, to some degree, give or take some liquidity grabs and slight retracements into premium ranges, will most likely to a certain degree continue this market downturn. If we see a break below the key psychological level of where the dollar sits now, at the 104, you guys can see here, that was a very significant area of demand previous to where we're currently sitting at now. We would definitely need to see some cooling data on the US front to break these key psychological levels. It's not just going to drop automatically and the dollar's not just going to continue to decline. We need to see supportive fundamental factors weighing on the strength of the dollar. If to some degree we can see a break of the key psychological level of 104 and we can make our way down into these lower demand ranges on the dollar, then most likely that is going to result to a further recovery in the strength of risk assets across the board. The total cryptocurrency market cap will most likely break above the $2.15 trillion mark, where it currently sits at right now, and start to target these highs at $2.2 to $2.3 trillion, going on to continue this overall bullish order flow that we have seen since last week. So if we can see dollar break below the 104 with dwindling US economic data weighing on the strength of the dollar, my projection is that the total cryptocurrency market cap will continue its steady rise and retrace to surpass $2.2 to $2.3 trillion, leading into the week after, right? Inversely, again, because we always want to talk about the opposite scenario because that is a possibility, the opposite scenario is that we continue to see a hot and resilient US economy, i.e., economists and market participants seeing strength and resiliency in the US economy via fundamentals coming out upbeat, showing signs that the US economy is still remaining strong and resilient. Ideally, again, the scenario that would be created is a risk-off environment, as the dollar would most likely give or take some liquidity grabs beneath these lows, start to make a recovery back above the 104, making its way back towards the 105 and correcting some of the previous week's downside move. Now, how this would be reflected most likely in the total cryptocurrency market cap is we would fail to break bullish above $2.2 to $2.3 trillion, i.e. this previous market lower high. And we would most likely, again, come into premium ranges and start to retrace back down into the low $2 trillion range, possibly coming and attacking this $1.98 trillion mark. With these fundamental factors in mind, I will see you guys throughout the entirety of the week. We have lots of great content dropping for you guys. If you all want updates day to day, every single evening, we give these updates in our private CYPRX community with Zoom call recordings throughout the entirety of the week. As always, many blessings to you guys. Stay focused out there, be cognizant, be aware, and I'll see you all in the next video breakdown.